Welcome to Game Trader Live with me, your host, Asif Khan, CEO, Editor-in-Chief, EIEIO over there at Shacknews. And you're on the Shacknews Twitch channel. I'm going to be talking about stocks here, investing, but also a couple of developments inside of some companies. I want to focus on Tesla and the rollout of full self-driving, the GameStop news that came out in the last month, what's going on at Apple, and I also want to take a look at a bunch of charts because, we got a lot to look at, as it was the end of the first half of the trading year, which means it was the end of the second quarter of the trading year, which means we're going to look at some charts. So let's get at it. Oh man, look at that. Remember when I said it was going to 24? It did. Now what? Anyway, we'll get back to that later. We'll be talking about Nintendo Switch 2, the launch of Switch 2, the response by the stock, and where I think it could go next. But yeah, that's basically what to expect. But as always, I want to start with a look at the overall stock market. So let's go quarterly. We had an outside quarter for the S&P 500. That means that things are getting increasingly more volatile. So you had this risk range from the previous quarter that we broke out above and below. We actually broke down below last quarter's low. If anyone remembers, there was a stock market sell-off in April, and then only to rally back to new highs. So we closed out the half of the year almost at an all-time high for the S&P 500. So here's a long-term look at the S&P 500. Basically, if you've ever bought the S&P 500 or a mutual fund or an ETF that tries to mimic or aims to mimic the fund, you're up. Everyone's up. So if you held through the volatility of the first half of the year, you're up. For the year, let's talk about the year. The S&P 500 is up 5.5%. For the quarter, it's up 10.5%, marking that rebound I was talking about. You had a bottom in April, followed by kind of finding its footing in May, breaking back above the all-time high. Just like last week is when that happened. S&P looks pretty good right now. No real actionable signals to call out except for just a continuation of this uptrend. So we'll see what happens there. Obviously, there's news coming out of Washington that will affect the stock market's direction going forward. So you're going to want to keep a close eye on what's happening with respects to this, as they call it, the big beautiful bill in Washington, D.C. You want to pay attention to what's happening with these tariff negotiations with Canada and Japan and China and, Europe. So there's a lot of potential catalysts for the market to move either direction. But right now, I would say that people are pretty focused on the big beautiful bill. It's the S&P 500. Let's look at the Dow Jones. I don't know where I'm typing. There we go. Dow Jones, similar looking chart. All these indices are going to look very similar. Although this is not an outside quarter. So you do have an outside quarter to the upside. So the buy signal would be above the high of 62.15 and 8 cents on the S&P 500. So the Dow Jones is actually looking a little weaker, or it has to play catch up. So if you're asking yourself, why is the Dow Jones performing worse than, say, the S&P 500? I've mentioned it before, but it's important to remind people. The Dow Jones is 30 companies. The S&P is 500 companies, 500 of the largest companies in the world. Whereas the Dow Jones tries to mimic, it tries to indicate like the global economy, but also the U.S. economy. So it is weighted. It's also a price weighted index. So instead of being market cap based, the different holdings are based on their share price. But to answer that question I asked myself, Apple had a red quarter. Apple has back-to-back red quarters. Apple is down on the year. It's also trading inside of previous year's range. So Apple's one of the largest components of the Dow, and it represents more of the price movement than you would see. It affects the S&P 500. It affects the Qs. We're going to look at the Qs here in a second. So here's the NASDAQ 100. Also an outside quarter to the upside. So you have the Dow, not outside quarter, but you do have the S&P and the NASDAQ 100 with an outside quarter to the upside. So like what's going on here? And NVIDIA is actually a part of both indices. But as one is market cap weighted and one is share price weighted, I think NVIDIA represents more of the NASDAQ 100. So you have the same phenomenon here. You had an inside quarter followed by a rev strat to the downside. It broke down below that with an outside quarter, only to come back up in another outside quarter. I guess what I'm getting at is that it's been about a year, and NVIDIA appears to be breaking out of a churning scenario. But yeah, the NASDAQ, it's comprised of all those big tech companies. NVIDIA, Microsoft, all these companies kind of driving price action. So yeah, that's a look at the market. I do want to kind of rush through some of these. But yeah, you have, whenever you have an outside bar, you have an instant new broadening formation. You have a series of ups and you have a series of downs that will kind of indicate which way to go. So you'd have a buy signal in the Qs above last quarter's high, the quarter that just ended tonight. You would have a sell signal below the low of the quarter, which is 402 and 39 cents per share. And you would have you'd have a buy signal above the high of the quarter, which is 552 and 80 cents per share. So you're going to have that same phenomenon in both the NASDAQ 100, obviously different price points, but in the NASDAQ 100 as well as the S&P 500. So in the S&P 500, you would have a sell signal below 48.3504 and a buy signal above 62.1508. And in the SPY, you'll see a similar phenomenon. A sell signal below 481.8 per share and a buy signal above 619.22 per share. The SPY just represents an ETF. It's not necessarily going to be a one-to-one correlation with the S&P 500. You can trade options on the S&P 500 or the SPY. They're two of the most liquid things in the entire world to trade. And yeah, both of them closed out really close to their all-time highs. So you're closer to breaking out to higher highs than you are going to lower lows. But on the back of two outside quarters, it wouldn't be that crazy to see some kind of equilibrium attempt where it churns inside of this previous quarter's range, which means there could be some downside. Before I move on from the indices, let's take a look at the volatility index. Holy cow. This is now a market that has experienced several panics in the last year. What you're looking at here is a VIX on the quarter. This is the volatility index. This is what determines the price of buying insurance on the S&P 500 options. So if you're buying put options, you're paying attention to the VIX. It'll tell you it's a factor, one of the factors into the calculation that determines the price of stock options. So you have a VIX that hit 60.13 earlier in the quarter. I'm going to go to like the weekly chart to show us when that happened. Oh, gee, it was the week after Liberation Day, where Glorious Leader implemented a bunch of escalating tariffs and it blew up in his face. You'll remember he famously started to walk back things as the U.S. Treasuries were selling off. So the VIX peaked in April and has kind of been selling off since. We had a little bit of a spurt. But this is a chart that I think basically sums up the philosophy of Wall Street right now when it comes to Donald Trump. Trump always chickens out. So instead of selling all of your stocks in early April, just tell yourself, Trump's full of shit. He'll probably chicken out. And if you stayed in it, if you stayed in the market, you've come out the other side ahead of where you started the year. Which means the VIX is now trading at the low. The VIX is trading at 16.11. So I'll say this about the volatility index. 16 is awfully low considering we have an orange idiot who's just running door to door, setting various departments on fire, while also creating a conflict in the Middle East. So I'd say 16 is kind of low on the VIX, if you ask me. So, just as 60 might have been too high. But I guess my point is, with the commander-in-chief hell-bent on creating more volatility in the world, he's saber-rattling about what he's going to do with the Federal Reserve Chair nomination. He's obviously bombed Iran. There's a lot of stuff going on that could create more volatility in the market. So I guess what I'm saying is, when everyone is selling their stocks and it looks terrifying, maybe that's the time to be a little bit more of a risk taker. But conversely, when things are looking okay and you have the S&P, it's sitting at all-time highs, this might be a time to take some risk off the table, either through hedging your own positions, by buying options, or straight up just raising some cash by selling your stocks. But I can tell you that, I don't really own many, I don't own many stocks that are in the S&P 500 or in the US market. My largest holding is not located here in the United States. It's a Japanese company. But yeah, we're looking at the market right now, but I am going to move on after we take a look at the Russell 2000, which is the small cap index. This is looking a little bit more like the Dow Jones. It did not have an outside quarter to the upside, so it has a lot further to go. Now, these are smaller companies. These are not the largest companies in the world. These are, I'm trying to think of a good example of an IWM holding. Let's see if I can find one. An example of a, Sprouts Farmers Market, that's in the IWM. Him and Hers Health, Rocket Lab, South Street Corporation. You may not have heard of some of these companies. But they're all in the Russell 2000. It's 2000 of the smaller cap companies that you may not have heard of. So yeah, that's how the Russell did. It definitely looks more like the Dow Jones than the other one. So there is no actionable signal on the quarterly charts of either of those, other than that you have this outside quarter that it could try to get back to the top of in the Dow. So yeah, those are the broader stock market looks. I am looking at quarterly charts because this is the end of the quarter. So if I do give you a price range, like I did in the NASDAQ and in the S&P, those are going to be sell signals that are worth something to you for the next 3 months. This is why I try to focus. It's why I do the show at the end of each month, is I usually am looking at monthly charts, which will at least give you enough information to use for the next month. But every 3 months, the quarter ends and we get to look at quarterly charts. Every 12 months, the year ends, we look at yearly charts. Because a signal is not completely formed until the time period is over. So I can look at something like an Apple. And one of my friends online was tweeting about Apple. Oh, it's not going anywhere. I'm like, yeah, it's trading inside year. And you can take a look at the chart right here. Apple is stuck in a range from last year. Apple's low last year was 164.07, and its all-time high was 260.10 cents. To this year, the high was 250 and the low was 169.21. It bounced before breaking down below the low, but it's also trading inside year. So why would you try to go after Apple in an inside year when they're having issues, right? Like the iPhone's not selling that well. Trump has targeted them. He's telling them that they can't make phones in India, even though Tim moved out of China into India to make American-sourced iPhones in India. Now there's an Indian tariff, possibly. Now there's a special Apple tax, possibly. So Apple has a lot of headline risk. I would continue to avoid it. And it's inside year, halfway through the year. We don't know where it's going from here, but we know it's kind of stuck in the mud right now. So why put your money in dead money? But yeah, let's keep it moving. Who else should we look at? I'm going to look at the big tech guys first. Not an outside quarter for Google either. Google's got its issues. It's got regulatory issues. It's also destroying its own platform. Google search is getting worse by the day. Internally at Google, there's a lot of Googlers leaving. A lot of people have lost faith in the CEO. This company should be in the lead in AI. They've been training AI models far longer than anyone else. And it's kind of baffling how they continue to be so far behind. That being said, they had Google I/O in the last quarter where they did show off some interesting technology like VO3 and all sorts of stuff. And I do think they have an edge on a lot of these other video generation platforms in that we've already agreed to their terms of service. We all just clicked the I agree when we signed up for YouTube. And what we agreed to was them training AI video generation on our content. Whoops. But yeah, I don't know. You got the last 3 months Google's been trying to recover. Real quick, let's look at Apple on the monthly chart. So you do have an inside month on Apple here. So you had that big sell-off in April. In May, it tried to stay inside of that. In June, it did stay inside of the previous range. So you would have a buy signal on the monthly chart above 207.39 in Apple and a sell signal below 195.07 in Apple. But like I said, when you look at the broader macro scenario for Apple, it's one of the weakest looking charts on the quarterly chart, and it's trading inside year. Don't be a hero. But if you want to make a quick trade, that's your risk range. I wouldn't even look at it because, like I said, you have time frame that is not, you do not have time frame continuity. You have a stock that's down on the year. It's down on the quarter. It's up on the month. It's up on the week. The week just started. Yeah, it's up on the day. The day just started. You had an outside day to the upside. So, you could day trade Apple tomorrow on that if you really want to. But as someone who knows a little bit about how this stock moves, I would not be a hero in an Apple inside year. But yeah, moving on from Apple and Google. Oh, you know what showed up on my screen today? Robinhood has hit an all-time high. Now look at this chart. This stock hit $85 the day after its IPO, or the week after its IPO. It then crashed to below $10. I think it was at $7.28. It's now at $96.80. That's an insane run for Robinhood. This is not a stock that I normally talk about on here, but it is just something I wanted to call out. I don't like the stock, but I haven't liked the stock for a long time. The thing about where it's currently trading, they're rolling out tokenized stock trading in Europe. Their pivot to crypto has been a boon for them, and their abusive relationship with clients apparently didn't work in driving people off after they turned off the buy button on GameStop all those years ago. People are still using Robinhood, and Wall Street's still investing in Robinhood. I'll give Robinhood credit. They did change the industry with respects to fees. By offering no fees on trading, they forced the hand of a lot of their competitors. But at a $73 billion market cap, trading at 23 times sales, 9 times book value, 55 times forward earnings, I don't like this stock here. But I haven't liked it for a long time. But anyone who's short this stock ever is losing money right now. So it's not a great time to be short the stock. And I have no shorts on right now. I have shorts on, but not on the market, on any stocks. The short interest on the company is only 4%. That's not a high short interest. You're not looking at further short squeeze. But yeah, I thought it was interesting. I just wanted to call it out. Robinhood. Schmoovin'. Let's see. Let's keep going big tech. Meta hit an all-time high today. I did see that. Yeah, this might be the best looking tech company chart. Yep, outside quarter. Outside quarter, but you gotta watch it, right? So it would be a buy signal above 747 and 90 cents, and it would be a sell signal below 479 and 80 cents. That's a huge range. It kind of gets back to my point that, watch out for inside quarters coming up, because we're not really in a news heavy part of the year. Obviously, you'll have earnings coming out here in the next 3 months, but outside of that, there's not like a lot of tech conferences. There's not a lot of events scheduled in summertime. So this might be a weaker time period. The other thing to remind people about Facebook and Google and Amazon or anyone else in the advertising game, Microsoft even, last year you had the election, the presidential election. You don't have that this year. So they may face some headwinds from the lack of election, political action committee spending in both Facebook, and that's Instagram, Facebook, WhatsApp, and then also YouTube and Google search. So I think that's something to at least consider when looking at both Meta and Google. But yeah, Meta, buy signal above 747.90, sell signal below 47.90 or 80 on the quarterly chart. Surfer Boy asks in the chat, Meta is still going up despite losing money hand over fist in its VR department. Yes, they make almost 10 times the amount of money per quarter off of advertising that they lose from Meta VR. So they're less profitable than they could be if they didn't care about VR like they do. It's not leading them to a loss. They're still wildly profitable. It's a lot like Xbox and Microsoft Windows, right? Microsoft won't even tell us the profit and loss on the Xbox division. At least Meta is transparent about that. And they have lost $20-30 billion a year for the last few years. But they're making hundreds of billions of dollars of ad revenue, Sam. So they subsidize their losing propositions, which are AI and VR and AR, some of these emerging technologies. They subsidize the research and development with their ad business. And their ad business is still considered probably the best in class. Yeah. But anyway, Meta stock looking pretty good. Also bounced right off of that the long-term uptrend. So it's actually broken out from what was a resistance point when it was the short of the century in December of 2021. It bounced off of that uptrend and went straight down for about 5 quarters in a row. It's back. It got back within its uptrend. It got inside of that channel. And then when it broke out above it, you basically have gotten more than $300 of gains since it broke out above that uptrend. And I have not been short this stock in like 4 years, so that makes me a happy boy. At some point though, man, you look at all these charts and you got to wonder, like, when is it time to take the other side of the trade? You know? It'd be nice to fund Shacknews on the tiers of Facebook shareholders again. I do mean again. On to another. I don't know. Let's see what's up on the monthly chart before we move on. Yeah, it's the same thing. You're just looking for a breakout to all-time highs in above 747.90. It'll just be a continuation, and it's up on the year, so it's looking good. Facebook has done very well for themselves. So that would be one on these up days where, it's sitting at all-time highs. You might be able to do a quick trade based on shorter term time frames because, up on the day, up on the week, up on the month, up on the quarter, and up on the year. That's what we call full time frame continuity. So it's just, the stock's going up. Why are you buying it? Because it's going up. This has nothing to do with the investment opportunity here. I'm not even talking about the valuation of the company here. Purely speaking from a charting perspective. Another tech behemoth that we pay attention to is Microsoft. Outside year to the upside. So it took out last year's low of 366 back when everything was selling off in April, only to break out above last year's high of 468.35. Currently trading at 497.24, all-time high 576 cents. So now let's look at the quarterly chart. That's an outside quarter. That's a big ass outside quarter. That's a quarter that eats up 1, 2, 3, 4, 5 ranges. All of these were stuck in the same kind of mud, right? You had the stock moving up a bunch. You had the stock move down a bunch. Took all of that back. This is bullish as hell. So you would want to buy it above $500.76 on the chart. I got all sorts of problems with management at Microsoft. I don't like the company. I don't like the direction of Windows 11. I got a lot of problems with this company. But the chart's telling you very simply, you're going to buy it above $500.76 and you're going to sell it below $344.79. Now that's a big ass range. Very similar to the meta range, right? Getting back to my point that it seems, and I'm not trying to predict anything, but it seems possible at the very least that we're going to see some of these next quarters lead to some churning around inside of the previous quarter's run. These are like yearly returns. These are multi-year returns that you're getting in 3 months. If you bought the low in April on Microsoft, you're up like 30-40% in 3 months. It's a pretty sweet gain. Now to the behemoth that I like, and I went on the record earlier this year saying that I would own NVIDIA. I do own NVIDIA. And NVIDIA closed out the quarter near an all-time high. This is another one of those outside quarters, so you know that it's trying to break out of equilibrium here. It doesn't know which way to go, but the last quarter was pretty telling. It hit a low of $80, $86. You damn near doubled your money if you bought the low in NVIDIA in 3 months. It was up 45% in the quarter, but if you bought the low, you've almost doubled your money in 3 months. It just wouldn't surprise me if we saw some profit taking here. Also, anecdotal evidence on the part of NVIDIA, insiders have sold up to $1 billion of the stock in recent months. These were planned sales, but it is important to note whenever an insider is selling. So Jensen Huang, the CEO, has sold some shares. I think it was like $500,000, but it was a planned sale. But yeah, NVIDIA, you buy it above its all-time high. I sound like a parrot here because the stocks where you have these outside bars, it's pretty clear. You're buying the breakout above 158.71 if you're a trader, and you're selling this below 86.62. Once again, that's a really big range. It wouldn't surprise me if we trade inside this range in the next quarter. So everyone who's like coming in now trying to make fast money in NVIDIA, you might be a little late. That's all I'm saying. The move, it's already schmooved. But yeah, this is another one that you're going to want to pay attention to. It's up on the year. It's up on the quarter. It was up on the month. It's up on the week. Oh, no, it's not. It's red on the week, but the week just started. And it's down on the day. So it doesn't have full time frame continuity. Meta is the only one that I've seen so far on my list that has full time frame continuity to the upside. Let's see, is there another tech company? Oh yeah. Tesla. Oof. Tesla, okay. Tesla looks nothing like these other stocks. Tesla is very much trading in its own personal hell. So here's what's going on at Tesla. All-time high reached going into the end of last year. The stock sold off basically the minute that Elon Musk did the Nazi salute. It's sold off real hard leading into the tariff news. So the low of the quarter ending March 31st was $2.17 and 2 cents a share. This last quarter, we saw the stock go below $2.17 and 2 cents. It hit a low of $2.14 and 25 cents. Why is this important? This has set up what is called a potential reversal strategy to the upside. They had every reason to take the stock all the way down, to 120 or wherever it wanted to go, right? Whatever this downtrend that I have here was headed. But it didn't. It came back with inside the range. So now you have a potential buy signal in Tesla. And look, this is the chart. I'm not talking about the fundamentals here. I'm not talking about demand for their vehicles. I'm not talking about their margins. I'm not talking about capacity utilization. I want to make that very clear. I am not saying to buy Tesla stock. What I am saying is there is a potential buy signal above $3.67 and 71 cents per share. And that would be a quarterly buy signal that takes you basically to September. I doubt that happens. Now, this is me taking off the trader hat, putting on the investor hat. From an investor in fundamental analysis standpoint, Tesla has a huge amount of problems. Tesla is experiencing a demand cliff dive in Europe. China is eating their lunch in Europe. The Xiaomi, all these different Chinese EVs are killing it over in Europe. And there's also just problems with Cybertrucks in general. But yeah, so you have a stock that was up on the quarter, has a potential buy signal, inside month as well. So potential buy signal above 357.54. But if you're going to wait for that to hit, you might as well wait for this quarterly to trigger. BYD. A bunch of BYD cars. And you live in the UK, right, Scanner? I think demand for Tesla, it's possible that it even peaked in the past 2 years. Okay, my bad. Not the UK. But yeah, like in Europe, overall, there's in Ireland, in Spain, in France, in Italy, in Germany, they hate Tesla. And for good reason. So that's a problem. On top of that, you have this big, beautiful bill that I mentioned earlier from Glorious Leader. It completely guts everything that Tesla's doing. There's no more subsidies for solar panels. There's no more subsidies for EVs. There's no tax credits for EVs. Right now, there's a $7,500 tax credit federally when you buy an EV. That's going to go away next year or even sooner. And then there's all these things in the big, beautiful bill that's pushing coal over solar, coal over wind. When Elon Musk and Tesla, they make the biggest battery packs in the universe for these megapack deployments of a huge amount of battery storage. The reason that they're making battery storage is for solar powered plants and wind powered plants and tide powered plants, because they need a place to store the energy so you can use them when it's not as windy, when it's not sunny at night, So Tesla has an existential crisis here with the big, beautiful bill. They will not be as profitable as they were in the last 5 years under this new tax regime if it passes. I do want to point out, Elon Musk knows this. And, this is probably a good time for us to, what do you guys say? You guys want to watch some interesting things with me? Because I have seen some shit. The internet has been interneting pretty hard here. But let's take a look at a couple of these clips.
Sure what just happened.
Sorry, I had her running without me going to the... Here we go. So this lady was in a driverless Tesla. They rolled out the driverless Tesla technology in Austin. It's like 11 Teslas driving around Austin, Texas right now. This lady was driving around in one and experienced this. So let's all take a look together. I'm going to listen to it too so I can hear what she's saying.
We have that stopwatch going. Whoa. All right. So we just slammed on the brake. I'm not exactly sure what just happened, but the car thought it saw something. And this happens in full self-driving. This is something that does happen. That's something that people have talked about being one of the limitations of full self-driving with robotaxi, is that occasionally it slams on the brakes out of nowhere. You guys kind of saw me react. You can see that my stuff is on the ground. But again, this is why it's in beta.
At this point,
we have that stopwatch going. Whoa. All right. So we just slammed on the...
So yeah, let me get the credit for this person, right? It's Twitter, so it's probably not even the right... I'm not going to credit the Jaboofer who stole this lady's video. But anyway, this lady experienced what I've experienced before while driving. I had my Tesla engaged in autopilot. I was on I-77, which is like the main highway here in Ohio, at least in Northeast Ohio. I had the car go from 65 miles an hour to a dead stop on the highway because there was a dip in the highway. That was the last time I used autopilot. I simply do not trust robo-taxis, robot cars. I do not believe that Tesla is able to create a safe driving experience with unsupervised FSD. Because what we are seeing here is supervised FSD. But why are these phantom braking things still happening? It's largely due to this being a vision-based platform as opposed to a spatial recognition-based platform, which is what Waymo is doing. We have another... This was an interesting one. Here, I'll pull this one up next. Okay. So this is one where a UPS truck pulls backwards, and the Tesla actually steers towards it.
Okay. The UPS car is coming very, very close to us.
So we can watch it again. The Tesla actually turns towards where the truck is going.
We got an interesting situation. Okay.
So that's not great.
The UPS car is coming.
Not as scary as the braking situation that lady went through, but still concerning. Yeah, this was what they called the... Teslarati called it the first intervention that they had seen. Someone else wanted to just point out, and this got community noted, so you know, we can talk about the context of it as well. But this video just shows a Tesla speeding. It's a screenshot of a Tesla going 35 and a 20. But what many Tesla owners pointed out is you can tell the car to break the law, basically. So yeah, I do want to point out that Tesla did post a video showing a Model Y delivering itself to its new owner in Austin, Texas. This was a 30-minute video that they cut down to 3.5 minutes for social, but they did post the full video to YouTube as well as Twitter if you want to watch the demo with multiple camera angles. I believe that they actually did this. We don't know how much supervision was required for this to be done. We don't know if they trained this route specifically before it was done. But I would say that this is an impressive feat. A car did deliver itself. We don't know, like, even if we have every camera angle, Denny, like, my concern is we don't know if, like, what kind of, I'm going to move my camera because I'm blocking their camera. We don't know what was done remotely, right? We don't know if there was intervention done remotely or not. But we do see a car driving with no driver in it and showing up to a dude's house, which is kind of cool. But yeah, I do want to show this just kind of in case anyone's like, he's just shitting on Tesla. No, I own Tesla stock. I have multiple Tesla vehicles, and I pre-ordered the Roadster 2 for $250,000 almost 8 years ago. So I'm not the person who's always looking to shit on Tesla, but I am always going to look at their product with a critical eye as an early adopter and as someone who did. I still believe in electric vehicles being the future of transportation in America and in the world. But I don't necessarily think that Tesla is the only end-all, be-all solution to that anymore. I probably won't buy another Tesla. I have a Model X that I got in 2018. And like I said, I have a Roadster that I'm waiting to get delivered. And based on these demos that I'm seeing from Austin, I doubt that we're going to see that anytime. That's the thing about Tesla, Sam, is I am not interested in investing here. I think the stock's overvalued. I think that the margins have likely peaked, at least for the next few years. I think with all the regulatory risks that they have, with tax going down, or tax credits disappearing, zero emission credits being re-regulated, and a focus on coal and other dinosaur fossils being the future of our technology here in America, I doubt that Tesla's going to have a good couple of years here. Not to mention Cybertruck is trash. And maybe I'll get to a video showing a Cybertruck on fire if I have a chance. But yeah, there it is. Drops it off in the fire lane, by the way. I don't know if anyone else noticed that. It'll be 8 years this fall, Lucci. 8 years since I gave Tesla $250,000 for a car that they haven't even showed me a picture of in a few years. But yeah, this guy had Tesla people waiting with him there. So that's super normal. And yeah, that was their 3.5 minute video kind of showcasing, oops, sorry, that horrific image. I do like that Cody Rhodes podcast. What do you want to talk about? It's good. But yeah, there's let's see if I can find one of those Cybertruck, because that's the other part of this shit sandwich is like, yes, you have the FSD. So like Elon's like, oh, we're going to ship FSD by summer of 2025. They put 11 cars in a very, very limited part of Austin, Texas. And they're all driving around now. So yes, technically you shipped it, but it's supervised FSD. It is not using LiDAR. It's just vision based. It's already had a phantom braking event that scared the crap out of that lady. Yeah, there's just people shitting all over Tesla on social media. But let me see if I can find this. I saw a Cybertruck video. Let's see, maybe if I just click media. I wonder if Elon's throttling those tweets so we can't find them easily. Seems to be the case. Let me see if I have it in my bookmarks. Nope, just cat pictures. Oh, this was interesting. So, yeah, I'm going to put this back on screen. So, this person alleges that Tesla tried to sell them a pre-owned Cybertruck as new. Ordered a Cybertruck last Saturday. It was the demo model with 800 miles. The salesperson in the store said I should buy it as is, as it had the largest discount they've ever seen, $3,900. My pickup was today at 2:30, but got a call this morning that pickup would be delayed due to the front motor not working. I dug a little deeper and it sounded like the demo car had quite a bit of work done. I asked for the service log, see pic. Sheesh, was pretty sure it was in an accident. Entire front end was replaced, minus the front motor. I canceled the order, going for a new truck, no discount unfortunately. How this person decided to still buy a Cybertruck is beyond me, but look at all the things that had been replaced in this somewhat new Cybertruck. The windshield, the panel on the hood, multiple panels on the hood, the cover, the wiper arm, the wiring harness, the grille, the headlamp, both lamps, front bumper cover, front bumper, all these things. Thousands of dollars of work had been done on this car that they were trying to sell as new. Not great. Not great at all. And then, yeah, you had this guy, Honest EVs, posted update for the 2024 Model Y. Here are 2 issues I've had since my high voltage battery was replaced with a refurbished one. I've had a battery replaced on a Tesla before. And they actually didn't replace mine. They had to fix it. They fixed one of the cells in my pack. So my Model S had a faulty cell. And when one cell fails, it warns the entire pack, and then you basically have a limited amount of time to park your car. First incident, using FSD and it makes a turn. Suddenly FSD just died. The parking assist, GPS, headlights, and cameras all just died. Second incident, the screen suddenly turns gray, pink, green, and blue. Starts lagging. This is the speedometer, because every display in the car is a screen. Right? There is no gauge in this car. It's all screens. I've had it happen where my speedometer screen goes black, and you're just freeballing it at that point. You have no idea how fast you're going. It's incredibly dangerous. And it just shows you how, maybe this really old technology that's been in cars is good. Having a physical gauge that tells you how fast you're going might be a useful thing. So yeah, it becomes frozen. He can't click on anything. Oh, that's right. The Model Y has one screen. So you don't even have the heads-up display that I have. That's right. So yeah, you can't even click anything, and the cameras are too hard to see and become unusable. All this comes after Tesla service gaslighting me and them having my car for 42 days. And the car being a disaster when I picked it up. Dust and sand on it, spiders living in it, scratches that I can prove weren't there, but don't recall before it went in. I was also told by Tesla employee to use it only when needed and as little as possible, which is amazing for a car you bought brand new and not even a year ago. So yeah, ownership's been great so far. I think
I'm recording for backup on my.
Yeah,
I'm recording for backup on my phone. Nothing works. Nothing works.
There, video of his unresponsive screen.
What the hell? Everything is broken. Everything's like pink and green. What is going on with my freaking Tesla? This car is like 10 months old. I started having issues at, 9 months? 8 months? Go slow.
Well, it's updated.
Okay, so the speedometer is working. But like, what the fuck is happening?
Well, at least it didn't go completely black. I guess this is the first video.
You can see the screen. There's like fucking a line here.
Yeah.
What is going on with my car? Bigfoot, it won't even play. Can I play a new song? Oh, okay, that came through. You just can't click anything. What?
So he was able to change what song was
Yo, what if
playing
our
from
car
his
was,
phone,
like, literally
and it
freezing
showed
cold?
up
Can't even
on
change
the screen. But the touch matrix is completely unresponsive in this video.
Piece of shit car. No, I'm sorry. I swear, do not buy a Tesla. Do not buy a Tesla. You literally can't even make up the issues I've had with this car, and it was a brand new Model Y. I just had the high voltage battery replaced. What the hell is going on with my car? There's lines and shit. You can't even like click anything. The lights are all glitchy. Like nothing works. This is the most piece of shit vehicle ever. Please, 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 please make this go wrong. This is a piece of shit car. I can't. Yeah, so when did I get the rainbow hardware? I'm recording for backup on my phone. Nothing. Yeah, so when did I get the rainbow hardware? What is going on with my car? It is actually destroyed. This is insane. This is a hardware 4Y 2024.
Wow, the cameras
June 28th.
are super messed up too.
What the hell is with the camera? Yeah, so when did I get...
And then...
This is owning a Tesla. This shit just blew up on me. I just got my high voltage battery replaced. What the fuck was that? Bro, Tesla, take this shit back. Buy back this car. I can't. What the fuck was that? What the fuck? Are we...
Okay, so FSD stopped working mid-turn? That's scary as shit.
good? Oh my god, that scared the shit out of me. What the fuck? Are we good? Adaptive headlights features are unavailable. What? Bro. Tell me my car didn't just blow the fuck up.
It just stopped.
Park assist unavailable. This is
basically every single system in there for full self-driving failed in like a 40-second period. Yeah, this idea that you're going to trust your Tesla to just drive away from you and come back to get you at work, I'm sorry, I'm not there for it. And then I would trust other people to be driving around in my Tesla all day? I'm sorry. These things cost too much. This is ridiculous. Really, really terrible, terrible user experiences. So yeah, back to the chart. Despite its huge run back, Tesla is still down on the year, and it's trading inside year. And I've been telling my friends who are trying to trade it to not be a hero in this stock, because everything I just showed you is fucking terrible. Like, that's and to be fair and balanced, I showed you the video of them delivering it too, right? Like, here's the delivery of a Model Y. Here's what happened with other people. So yeah, I would not trust a Tesla to drive me around. That being said, I don't use autopilot in my car at all. I like driving the car. Like, I think it's good. I like driving my Model X. I don't have a Model Y. I don't have a Model 3. I have a Model X and a Model S. And I enjoyed driving the Model S when I got it in 2014. And yeah, I don't enjoy I simply don't trust robot cars at all. Yeah, before we move on, I do have one video that I can share that I think is kind of funny and would also apply to this conversation.
White has been dealing with a persistent... For the past few weeks, Randall White has been dealing with a persistent and annoying problem right outside his San Francisco condo.
So I was like, where's that coming from? I looked down, and I was like, I think it's coming from the Waymo cars.
This parking lot full of driverless Waymo cars has had multiple incidents where suddenly the vehicles become confused and start honking all at each other. White says he heard it for the first time about 2 weeks ago after he was woken up around 4 a.m.
Then it happened again, and again, and I started thinking, well, this is an issue.
White isn't the only one who's had issues with the noises either. Several people who live in the buildings nearby the parking lot have also had similar complaints.
Over the past 2 weeks, I've been woken up more times overnight than I have combined over 20 years.
Russell Pofsky lives in a building adjacent to White. He says the honking incidents have happened at random times during both the day and night and have started to take a toll on him.
I could not be more cranky today for a Monday. After these past 2 weeks, it's really at a high level. It's just really, really, it's tough. It affects the way you feel.
White says he and others have reached out to Waymo about the issue. In a statement sent to ABC7 News, Waymo says, quote, "We are aware that in some scenarios, our vehicles may briefly honk while navigating our parking lots. We have identified the cause and are in the process of implementing a fix." White says Monday afternoon was the first time the honking seems to have gotten better. Despite the inconvenience, he tells me he's still a fan of the autonomous vehicle company and uses the cars on a regular basis.
And so I was all about it until the honking started. And all I really want is resolution.
In San Francisco, Tim Johns, ABC7 News.
So yeah, all robot cars are kind of wonky right now, is all I'm getting at, and I don't think they should be trusted. But Waymo seems to have a better tech solution than Tesla does right now. Which is why I would stay the hell away from the stock. So that was a long diatribe on why I would avoid Tesla here. I think it's a combination of things. It's the regulatory environment. It's the fact that Elon Musk is actually lashing out at Donald Trump right now. I'll say this. I'm doing my part, damn it. I saw him ranting about the big, beautiful bill, and I said, you know what? Let's take an opportunity here to try to convince him to do something. I said, hey, Elon, now would be a great time to admit to the election fraud that you took part in to get Trump elected. You'll never repair your image, but you could at least go down in history as the person who stopped Trump from destroying the United States entirely. This was a quote tweet to him saying, every member of Congress who campaigned on reducing government spending and then immediately voted for the biggest debt increase in history should hang their head in shame. And they will lose their primary next year if it is the last thing I do on this earth. That's a super normal thing to say. Right? Not. Right? Very normal. Super chill. Yeah, if he's feeling destructive, like, go after Trump, dude. That he's the source. But yeah, I would say that a billionaire attacking the Trump administration, probably not the best move for your company. We'll see what happens. It is a terrible bill, kind of across the board. But yeah, I think that's everything on Tesla. I don't have much else to say other than the damage to the brand, I think, is still being felt. And things like these phantom brakings or the Cybertruck being dog water, they're all bad. They're all bad for the company. Elon's behavior is bad for the company. So I would just stay away. I'm not saying to short it because, you know, this is a tough market to short anything in, but I would not be a buyer here. That being said, I do own shares of Tesla. I bought them 13 years ago. It was a very different company back then, and I have a very low basis. It's in my retirement account. I'm not going to sell it. Mainly because I think that the robot technology is their only way out of this scenario that they find themselves in. I actually have more faith in their robot than I do their robot taxi. Let's see. Let's hit some gaming stocks. This is called Game Trader, right? EA Sports. It's in the game. EA Sports, man. Huge comeback. I did see the robots pouring drinks. EA had a sell-off with the rest of the market, right, in April. That proved to be... Actually, no, it was actually earlier this year, in January. I think they revised their revenue or something. It's come back almost all the way to where it was last year. No outside quarter to look at. Potential outside year. Hard to say. No real signals on the longer term charts here. Did trade inside month, which means you have a potential buy signal above 159.99 and a sell signal below 143 and 51 cents. And this would be valid through the next month of July. But week just started, day just started. But yeah, you have a stock that is I think we're looking at full time frame continuity. Yep, up on the year, up on the quarter, up on the month, up on the week, and up on the day. Full time frame continuity to the upside. So you are looking for a breakout above that 159.99, and that would be a continuation. And it would set up a run to the all-time high, which was almost a year ago, of 160.70. So it has not broken out to an all-time high, very close. So we're going to have to pay attention to EA. They did just announce that they're making a basketball NCAA game. So that's kind of cool. Let's see. Who else do we got in gaming? Oh, yeah. Well, if it isn't GameStop. What did GameStop do this quarter, you guys? They diluted shareholders. Again, $1.75 billion of convertible notes issued so that they can buy some more fucking Bitcoin. What is the point of this company right now? What does GameStop even do? They just dilute shareholders and do stupid shit with the money. Last time it was, oh, we're going to build an NFT marketplace. This time it's, oh, we're going to buy Bitcoin. And they're like, oh, the future of gaming is trading cards. These are all things that the CEO said. It's an abusive relationship between the CEO of GameStop and the shareholders of GameStop at this point. You're trapped. And these convertible notes, they're encumbering the company for till like 2032. Yeah, buying money that isn't even money. Taking your liquid assets and turning them into even more illiquid assets. And timing it at a point where Bitcoin's at $100,000. He could have done this back in 2021 and made bank off of it. They could have made like 300%. Doing it now, it's like, I don't know. Their business model, the business model at GameStop right now. This is the business model at GameStop right now. Let your non-performing leases expire. They're not canceling them early. They're just letting non-performing leases expire and shutting down the stores. So they're going to keep shutting down the stores, which is going to make revenue go down. They're focusing on this card grading stuff, which sure, it's growing. Collectible revenue is growing. Software is declining and hardware is declining. These are multiple year bear markets in two of their largest revenue segments. They have no explanation for how they're going to grow those things. And instead of going out there and taking some of this money and, I don't know, getting some exclusives, right? Like, go out there and get some exclusives. Nope. We're going to buy Bitcoin instead. They could buy Ubisoft. GameStop could buy Ubisoft straight cash. Now, I know that's like monkey paw curling levels of suggestion there. But I'm just saying, like, one thing GameStop could do with their giant pile of money is buy a company that's less shitty than them. They haven't done that. And, like, anyone who's like, oh, they're going to hype up some other thing and this is going to be the next big thing. And Ryan Cohen has played all of you. So, yeah, outside quarter in GameStop. So you would have a sell signal below the low of 2078 and a buy signal above the high of 3581. That's also a very wide range, which is why I would mention it's possible that we trade inside of that previous quarter. And you know what happens when you trade inside quarter? All the idiots who are trying to trade breakouts with options get killed. If you really believe in this company, just buy the stock. Don't trade the options. You are not deep fucking value. You are not Keith Gill. As much as people want to think they're Keith Gill. Sorry. I keep jump scaring you guys with that. As much as people want to act like they're Keith Gill, want to cosplay as Keith Gill, options trades like that come around once every few millennia. And he did it twice. So congratulations to Keith. But, like, not everybody knows how to trade options. Cutting your teeth in the GameStop options pit is a dangerous game. I would warn against it. If you really believe in the turnaround happening there, just buy the stock. But yeah, as someone who has watched them now dilute shareholders, I think it's 4 or 5 times in the last 5 years, I have no faith that they know what they're doing over there. And I remember Reggie Fils-Aimé, when he when he left his role on the board of directors, he said, I don't think they know what they're doing. And I think he's dead right. They don't know what they're doing. So it's not just buying money that isn't money. It's diluting your shareholders, taking that cash, and then putting it in something illiquid that you're now going to have to mark to market every quarter. So there's going to be fluctuations in Bitcoin. Oh, why did GameStop miss earnings? Oh, their Bitcoin position dropped X amount of dollars. Like, it's just now another risk on the balance sheet. I don't get it. And this idea that, oh, GameStop's the short squeeze of the century, it's not. Ryan Cohen is working with the shorts. This was a private offering. This recent debt offering was not made available to the existing shareholders. What's up with that? If he's such a man of the people leading this Reddit rebellion, wouldn't he have at least allowed the Redditors to buy in on this? No, he didn't. Because who is he selling these to? The same people who caused the short squeeze. The same people who shorted this over 100%. He's working with the enemy. And so many GameStop shareholders don't see that. It's sad. It's sad and pathetic, really. But, yeah, I don't know. That's a gaming stock that we had to talk about, right? I would just stay away. I am not saying to short it. It's definitely not a short. They got more cash than they've ever had. So they're not at risk of going bankrupt. But they're also, that's what I was going to look at. I wanted to see what the short interest was. I just realized I have headphones on and I don't need them. Yeah, you're talking about a company trading at 44 times trailing earnings, 2 times book value, market cap around 11 billion, with around $7 billion in cash on hand. Short interest is close to 20%. So it's not insignificant. Like, there is a decent amount of short interest. But if they keep diluting shareholders and handing more shares over to the counterparties, I don't see how this thing's going to run. Every single time that the stock starts to run, Ryan Cohen throws cold water on the rally. So I would not touch that thing. So yeah, GameStop. Power to the players. I just want to mention, GoPro's not dead. In case you were wondering. Close. Very close to dead. Let's look at a long-term chart. Oh my God. GoPro has fallen from $98.47 back in December of 2014 to 75 cents today. And it hit a low of 40 cents during the quarter. That's a turd, but is it a good turd? Who knows? Let's see. Gaming stocks. Microsoft makes video games. There's the Netflix chart if you just want to make me feel stupid. Yeah. No brainer. One of the best looking charts in the entire market. What a massive run it's had. Yikes. They publish games. I'm not sure I'd be running after buying it in the 1300s, but good run. Oh, I know a company we could talk about, you guys. What if we talked about Nintendo? Oh, look at that. Look where Nintendo closed today. Slightly above $24 a share. Huh. Who had that target? Oh, that was me. That was me in April. I had that target. Well, if you bought the low, you made over, let's see. Let's get a good number. Calculating. A little back of the envelope for you. If you bought the low, that's 9 over 15. You returned 60% on Nintendo from the April low to the close today. Pretty good. Huge run for the stock. Obviously on the back of a successful Switch 2 launch. They didn't do any review units. That didn't matter. Mario Kart World cost $80. That didn't matter. Game carts are not loved by physical media collectors. Maybe that matters. Because we saw some data from third-party sales that weren't that encouraging. But it's a $500 system if you're buying the cart bundle. $80 for the game separately for carts. We have Donkey Kong coming up that is priced at $70 though. Yeah, things are going very well for Nintendo. Their CEO issued an apology that their product is selling so well they can't keep it in stock. It was the funniest please understand I've seen from Nintendo in a long, long time. So, okay, what next, Asif? You're so good at predicting things. I'm not, first of all. I just let the uptrend tell me where it was going. So, I think it's pretty clear, guys, we're in an uptrend in Nintendo. But we are at the high end. We're at the top of this uptrend. This is an uptrend that has had other, support lines. There's this area down here where it bottomed. It bottomed when, the week before the Mario movie came out in 23. It bottomed at around $9.26. Bounced right off of that trend line. We are now in a sustained uptrend, but the question is, how is it going to handle this uptrend? We're almost right at that line, which is 24.10 or something, 24.56. It's just, we have to wait and see. Either this stock is going to continue to go parabolically higher and break out, right? It could break out to a new high, or we're going to see some consolidation, which I don't know if you can tell. I'm kind of framing this whole episode saying we've had a huge run. It's possible that things aren't going to go to the moon because of all these other global risks that we have, be it war, that is a great question. Thank you very much. We don't have our store up and running right now. This is a one-of-a-kind hat, but I know some other people who want this hat as well. I appreciate you reaching out about that, and this is just note to self to make hat faster and relaunch store faster. But I appreciate the love. Yeah, all I'm saying is that things could be a little more maybe a little tougher to get some gains here when you're buying Nintendo at 24 versus 15 just 3 months ago, right? So some consolidation to this move wouldn't surprise me. But there are a lot of positive catalysts ahead. You have Donkey Kong Bonanza coming out, Mario Party Jamboree TV. You have Drag X Drive. You have Metroid Prime 4 Beyond is coming out sometime this year. Still don't have a release date, Doug Bowser. You have a Pokemon game coming out in October, Z&A. And you have Hyrule Warriors in, I think, November? So there's a decent amount of stuff out there. You also have the 40th anniversary of Mario this September. Maybe we get a new game. I doubt that we're getting a new 3D platforming Mario, given that Donkey Kong Bonanza comes out this year. But maybe we get something else, like a Mario 40, like a Nintendo Switch Online game, or maybe a new Mario Maker, or maybe a Mario Sports title. I do think there's some more potential upside just on their own first-party software side. I do worry that the cadence of releases is not as impressive as it was in the Switch 1 launch year, but at the same time, the hardware's selling like crazy. And one big thing that if you watch our This Week in Switch 2 podcast, which drops on Tuesdays, you'll notice that we've been talking about existing Switch games a lot, because one of the value propositions to this the whole Switch 2 thing is that every game almost, most first-party games, run better for free. These aren't Switch 2 editions. They just run better. And I think that is a huge value proposition to a lot of people. And this backwards compatibility and the continuity of the eShop, I think all of those are value propositions. The other thing going on is there's a lot of people who didn't play Zelda. They didn't play Breath of the Wild, and they didn't play Tears of the Kingdom. And now you have this awesome way to do that. So, I think there's a lot of catalysts for Nintendo ahead. But you also have earnings coming up, and they are notorious sandbaggers. So, we're going to know how the launch month did, right? We're going to know when they report next. We're going to know how did June look, right? We're going to know first-party sales for June, which means Mario Kart World. We're going to know how many bundles were sold, right? And we're going to know the breakdown of bundles versus Switch alone. We're going to know how the company is viewing software. We are not going to get data on Donkey Kong until the quarter after. So that's going to be a little weird. Unless they really want to pound their chest, sometimes they'll announce game sales for the first week. Nintendo hasn't really been doing that lately. So it wouldn't surprise me if we don't get Donkey Kong numbers this next quarter. They wait until they report third calendar quarter results. So I guess that's what I'm saying, is that there's a reason to be cautious about all stocks right now. Not just Nintendo. But Nintendo has had a massive run. Nintendo is outperforming most assets this year. It's up 64% on the year. You compare that to the S&P 500 is up 5% this year, 5.5% this year. The NASDAQ is up 7.89% this year. Nvidia is up 17.3% this year. So Nintendo is having itself a year. I would just caution people that we are close to the top of this long-term uptrend, which it has sold off from every single time it's gotten here before. So we do have evidence of that. But, we're going to wait and see what happens. And maybe there'll be a shorter-term sell signal. But I am of the opinion that you probably want to buy whatever weakness does occur in this stock, because like we saw in April, right, when it had this massive outside bar to the upside, there's appetite down there at like 15 a share or 20 a share. Even if you bought it at 20 a share, you're up 20% already. That's a crazy gain. So, yeah. Let's see. Some other gaming. CD Projekt Red is back in business, baby. That's the highest this stock has been in 3 years. It's trading at $4 back in 2022 on the back of all that bad Cyberpunk 2077 PR. It is now back at 1935. So huge run from CD Projekt, and up on the year, up on the quarter, up on the year, up on the quarter, up on the month, up on the week, and up on the day. So yeah, CD Projekt Red has full time frame continuity to the upside. You would want to watch a breakout above this last quarter's high, which was $19.74 per share. But once again, that's a stock that jumped 38% in a quarter. I wouldn't be surprised if you see some consolidation. I know I sound like a broken record, but I really would not be surprised if we see some consolidation kind of overall. Unity. Barf. It's just, yeah. No, I'm good. Inside year. No signal on the quarterly chart. Nothing really to say on the monthly chart. Inside week, but the week just started. And no signals there. Definitely a rough patch since the IPO. Maybe come back next year. How about that for Unity? Speaking of come back next year, Ubisoft. That's a video game company. I even own this turd. Yeah. Just it's not a good looking chart at all. I got nothing good to say about this. This is a company that peaked in 2018 at $24.55 per share. The stock is currently trading for $2.15. I don't think it's going bankrupt. And as a result, I bought some slightly lower than where it's currently trading. It was a flyer. I put less than 1% of my assets towards it. It is a speculative position, but it's basically a stock that's priced like an option. So I'm going to treat it like that. I took a small speculative position last quarter in it, but it's not looking good. I don't know what the hell's going to happen over there. I do think it would be better if they got acquired instead of doing this whole subsidiary with Tencent thing, but they did the subsidiary with Tencent thing, and their stake in the subsidiary is being valued more. It's valued more than the company is being valued right now. So if they just liquidated, they would, like, shareholders would make money. So it's euro into dollar. So, like, it's valued at 1.3 billion euro. That's 1.5 billion dollars. And the subsidiary that they created with Tencent is being valued at 4 billion, 25% of which Tencent owns, 75% of which Ubisoft owns. So they own something that's valued at $3 billion. But their whole company is being valued at $1.5 billion. Something's got to give here. I don't know when or how or why, but I did take a small speculative position in Ubisoft in the last quarter, and they do make video games from time to time. The last Assassin's Creed game was critically acclaimed. It's actually a pretty cool setting in Japan. So, there was hope that would help turn the tide. I know that Star Wars, whatever the fuck that game was called, is coming to Switch 2. So we'll see if that has new life over there. I'm sure they're working on that Prince of Persia remake, the Sands of Time remake still, I'm sure. But yeah, dude, a good Rayman Slinky Jim. That's what I'm waiting for. Rayman Legends is maybe the best game Ubisoft has made in the last decade. I will say that I liked Mario and Rabbids and Mario and Rabbids Sparks of Hope. Yeah, while we're talking about games that'll probably never come out, Beyond Good and Evil 2, Denny. That's a game that got announced that Ubisoft then swept under the rug. Yeah, Sands of Time remake would be nice. I think there's a lot of really good IP at Ubisoft. I'm not saying that the games are good right now or the studios are great or the executives are good. I'm definitely not saying that. But I am saying that there's stuff at Ubisoft that I don't think is being valued properly by the market. That being said, the management deserves everything it's gotten. But I look at this long-term chart and I'm like, I have to consider buying this. Because, yeah, Nintendo could buy Ubisoft straight cash. I'm not saying that would happen. Sony could buy Ubisoft straight cash. Not saying it could happen. I'm saying they have the money. Microsoft could definitely buy Ubisoft. Yep, later, Lucci. Thanks for tuning in, buddy. I know it's late out there in Russia. But yeah, I guess what I'm saying is that, like, if a company really wanted to take over those intellectual properties, they could. And it seems like the price is close to right for that. If Tencent was sniffing around and they came up with this subsidiary solution, that probably prevents this from happening now. But my whole idea, like, in the past when I've thought, hey, XYZ company should acquire ABC company, instead of just buying ABC company for myself, I usually just hold on to XYZ company. Why not buy the company you think's going to get acquired? Even just take a flyer on it. And that's what I've done. I'm not saying you should do it, but that's my logic for doing it. And the chart looks like complete dog shit, so I got nothing to say about the chart. It's bad. It's been bad. It remains bad. And it is that the opposite. Time frame continuity to downside. Ubisoft's down on the year. Ubisoft's down on the quarter. Ubisoft's down on the month. Ubisoft is up on the week. Yeah. So not full time frame continuity, but the longer term time frames tell the story here. Not looking good. Is there anything else that I want to talk about before I go? I think I'm good. Rivian. Stay of execution here. I think this company's going to be in trouble too, with these tax credits going away and the incentives for alternative energy vehicles. Rough roads ahead for Rivian. Inside month, so you would have a sell signal below 13.26 per share and a buy signal above 14.80 a share. Yeah. Oh, my bad. Take-Two Interactive. Up on the year, continuing an inside year and up buy signal. So you got to buy. The stock's still running. Up on the quarter, even though they delayed the game this quarter. Up on the month. Up on the week, which probably means it's up on the day. Yep, outside day. So you got a buy signal on the daily chart above 2.45 and 30 cents, which I believe is the all-time high. You know your stock's doing pretty well when it hits an all-time high the day that I'm talking about it. And there are two stocks that I'm talking about today that happened with. Nintendo and Take-Two. So I think that's a good place to leave it. You guys have any questions, comments, requests, thoughts? No? Cool. That's gonna do it for the show then. Oh, hey, Denny got one. Okay, what do you got? What's a question? What do you got? Shoot. Okay, this is a good question. How do I think Microsoft will be at the end, how they will end up by the end of the year if some of this console crossover stuff works out? So you're talking about releasing their games on other platforms. It's not going to matter. Most of Microsoft's money comes from two divisions: Azure and Windows / Office 365. They kind of bundle those together. And then AI is this third emerging segment, Copilot and the subscription services around Copilot, right? Oh, I know. Microsoft buying Ubisoft would be, ugh. Oh, I don't want it. I think it's a really interesting question, Denny, because if they fail to bring Call of Duty to Nintendo Switch 2, are they going to be forced by the Japanese government to divest Nintendo or divest Activision Blizzard? That would be kind of cool. I think that I guess my answer is it really depends on COD. How their COD support continues, I think is important. Also, we haven't heard about any of these other games. We heard Grounded 2 is announced. We heard Gears of War, whatever the hell they're calling it, is coming back, but none of these games have been announced for Switch 2. Doom the Dark Ages is out. Has not been announced for Switch 2. So it feels like Microsoft's dragging their feet. Now, on the other hand, do I think that this Xbox ROG Ally project is going to work out for them? No. So maybe after that fails, they'll come back to Jesus and realize that they need to become a third-party developer. But the Microsoft gaming division as a whole is not significant to their operations. Like, they don't even break out the profit and loss, which I think is really weird. They don't tell us unit sales of consoles or games, so I don't know if they start telling us how many units they've sold, maybe that would be a sign that things are turning for them. But it's almost like how Facebook has Reality Labs, where they just piss away money every year. Apple has Apple TV Plus, where they're pissing away money every year. It feels like this is Microsoft's money shredder. Like, they just put money into Xbox, and then it just disappears. They're really good at that. They did it with Skype. They bought Skype for over $8 billion, and it no longer exists. So, do I think that Microsoft could see some success by becoming a third-party software developer? Yes. But they are so bad at executing. I mean, in gaming. And honestly, some other places. I mean, they bought LinkedIn for $27 billion. They bought Nokia. That was a huge fail. They've never been able to enter the smartphone space. They've limped into the tablet space from time to time. They kind of missed, I wouldn't say they missed it, but they didn't really participate very aggressively in VR or AR. They had HoloLens, but then that's gone. But when I look at like cutting edge technologies, the AI space is where Microsoft is in the lead in a lot of ways. So I think that that's really going to determine where the stock goes more than gaming would. So I that's why I don't get why they keep making these giant investments in gaming. It's like they literally just want you to like pay attention to the cloud numbers or something. Like they want to juice their cloud numbers with this or something, because they're not doing it. They're not doing it for the profit. Yeah, a Kinect 2, sure. I don't know what exactly would be the innovative thing they could do in gaming, because they've never really been innovative in gaming. Their controllers are great. I have a Xbox. Look, it's what I have plugged into my PC right here. But that's my point. I don't need a freaking Xbox. I have a PC. That's the problem. I said this on Shack Together or some podcast. If everything's an Xbox, nothing's an Xbox. Like, I firmly believe that. But I do like their controllers. But yeah, good question, Denny. So, I think that'll do it. As always, manage your risk. Like I said earlier, I do think that we are at a time with the volatility index low, right here in the 16 area. It hit as low as 1458 during the quarter, during the year. During the quarter, it hit a low of 1611. So volatility is low, which means insurance on stocks is cheaper than it was at any point during the quarter. So if you want to hedge your positions, now is not a bad time to buy put options. Now, what would you buy put options on? I'm not sure. I'm not telling anyone to go out there and short anything. But, you know, like with the S&P hitting all-time highs, against the backdrop of what's happening with the orange idiot, I think it's cause for concern. It is something that at the end of every week, I'm like, I ask myself a couple of questions. Do I have enough liquidity to keep running my businesses? Do I think that Donald Trump can say something over the weekend that would prevent me from creating liquidity if I need to? And if I'm in a situation where I need liquidity, I lighten up on some positions. So I have decreased my Nintendo position. Not like a whole lot, but I have been selling some into these runs, mainly to keep Shacknews operating. Or, you know, to generate some cash for my own personal living expenses. But yeah, I do think this is a time to lighten up on on some of your stocks that are winning, and just be prepared for some consolidation. I'm not saying that the bear market is here, head for the hills. It might be. It really might be here. But at the same time, if the taco trade persists, which for folks at home who don't know what the taco trade is, it stands for Trump always chickens out. So if that happens again, and he chickens out with respects to China and Japan and Canada and Mexico and Congress and the big beautiful bill and Elon Musk, then the stock market will probably go higher. And there's a chance that the market goes higher even if the big beautiful bill passes, because it is a boon for billionaires. It hands tax credits over to corporations and billionaires. It's a boon for the oil and gas industry. It's a boon for the coal industry. So there's going to be winners and losers based on what happens to that bill. But as I showed earlier, Elon Musk is hell-bent on stopping it, threatening Congress with, I don't know what, his little election manipulation algorithm. I guess he can just, I don't know if you noticed, but like Senate has been trending on Twitter all weekend. I'm sure he's influencing what's trending on Twitter these days to line up with his political beliefs of the week. But yeah, I would say given that backdrop, it makes sense to be a little cautious. That being said, in times of stress and concern, what better way to de-stress than to play some Nintendo Switch 2? Just like in 2020, when Animal Crossing was released. Nintendo was there in a very dark time. These are not the brightest times, and Nintendo's here with something new and cool. Granted, it costs $450, but it seems to be selling pretty well. So, I'll be back in a month. This is a monthly show. It'll be the end of July. I just want to tell you guys ahead of time. It'll be July 31st, which is a Thursday, will be the next episode of Game Trader Live, the monthly edition. We are starting to do Game Trader Live for earnings results. Some days they're kind of packed, so we'll do like a bunch at once. But yeah, we'll have a Game Trader on Thursday, July 31st. As always, manage your risk. Ask yourself, if I didn't own this stock, would I buy it? And if you say no, it might be time to sell. That being said, I think the future for Nintendo is pretty bright. Despite this run in the stock, I think things are looking good. But yeah, it's hard not to be like, hey, maybe take a little off the table after a 60+% run in less than a year. That's going to do it. I'll see you guys next time. Bye-bye.